folks, I hope you are ready for an absolutely wild week in the market. I'm going to take you through and get you prepped for everything that's about to happen this week, what's going on. A very important stock of mine is reporting this week. I want to go through that one. There's many other various things that are going on in the market that I want to show you that are going on this week that are absolutely massive and will move the market in a huge way. Now, last week was pure insanity, okay? Pure insanity. If you missed what happened, okay? It was big tech earnings week. We had all the big dogs report. Microsoft, Apple, Meta, obviously Google McDougal, Amazon. All the big dogs reported. Plus, you had a bunch of other important companies like Shopify and Caterpillar and Boeing and UPS. And I mean, it was absolute craziness last week, okay? And obviously, many of these stocks moved massively. Google crashed. Microsoft made a very big downward move from Microsoft. That's one of the biggest moves I've seen in quite some time. Meta completely fell apart. Shopify made a great upward move. Apple hung in there pretty decent and saved Amazon. Amazon was down like 20% after hours, but it got saved because Apple actually came in with decent earnings, which helped out the whole NASDAQ in that day in general. So absolute craziness last week. We get another crazy week. Hope you guys enjoy this as always. I appreciate everybody for joining me on today's video, and let's jump into this, okay? By the way, if you're looking to join my private stock group this week, get access to all the private Discord chats, course curriculums, everything like that, as well as know any moves I'm making out there in the market. Check out the pinned comment down there. NXP Semiconductors reporting Monday after the bell. So this is the first earnings that are coming that's going to matter. It's about a $40 billion market cap. When it comes to NXP, a lot of you guys probably have never heard this company before. If I remember, Qualcomm tried to buy NXP many years ago, but the deal fell apart essentially because the government didn't want to allow it. They felt there was going to be too much of a potential monopoly stake there in the semiconductor industry. And so that deal fell apart. And I remember, NXP actually got to get paid out. I think it was $1 or $2 billion for the deal not going through. It was like amazing. Like imagine that, like you're going to get bought out by another company, but because you don't get bought out, the other company has to pay you like $1 billion or $2 billion. How good is that, right? And so NXP, strong company, but it's in the semiconductor space. No one wants a piece of semiconductor companies right now, which if you don't know what a semiconductor is, basically the components that go into different electronics out there. NXP's always been big in the auto sector as well. And so, it's an important company. It will move likely the entire semiconductor index on Tuesday. So do keep that in mind there. SoFi is reporting Tuesday before the bell. Now, I want to say this about SoFi, okay? This is a stock that's been absolutely nailed. It's a $5 stock here today, okay? I want to say this about SoFi. I've been incredibly impressed by SoFi. I've looked at their last several numbers, and I've listened to their last several conference calls of this company. I do not personally have any money invested in SoFi right now. I already own a lot of businesses that lose a lot of money, so I'm like, do I want to add another one? Let's just buy all the companies that lose money, right? But in all seriousness, in regards to SoFi, the numbers have been amazing. Obviously, not making money on the bottom line, but in terms of the revenue growth, in terms of the conference call, in terms of the client, in the quality of their clientele, I've been extremely impressed with SoFi. It's on my radar. I keep it on my watch list. I'm continuing to research the company, and it's a stock I'm considering as a 2023 stock. It's just in a very tough dynamic right now because of the whole student loan situation, and obviously, we don't want to go down that rabbit hole. But then there's obviously a lot of worries about just banking and fintech in general, and no one wants to hold a money-losing company right now, which obviously SoFi fits into that category. So I'm definitely considering this stock as a 2023 ad. The revenue growth is amazing. I mean, look at this. They're supposed to grow revenues nearly 50% this year, another almost 40% next year. So the way to kind of think about that, whoa, hey, I don't need that. What are we doing here, okay? But, the way to think about this, right, is even if we're in a recessionary scenario in 2023, this company's still going to grow, and it'll grow very nicely regardless of what the situation is there, okay? But the problem with this company is it's a money loser. EPS loss this year, another big EPS loss next year. 26 cents on a $5 stock is a pretty decent loss there, right? And so that's why no one wants a piece of this. Man, I'm going to check these earnings out, and it's definitely a stock I'm considering because, you don't find in terms of, these sorts of banking related companies, which SoFi is kind of that cross sections of banking and fintech, you don't find this type of growth almost anywhere. It's incredible growth. So definitely a stock I'm going to consider pretty strongly. Okay. Uber's reporting Tuesday before the bell. Now, Uber I think it's a really intriguing stock. So it's down about 30%, 37% this year, right? But here's the thing with Uber. Think about this for a moment, right? They're benefiting from massive trends. Travel opening back up, huge for Uber, right? If you're talking about travel being shut down, like obviously it was for the most part in 2020 and into much of 2021, right? Horrible for Uber's business model. As soon as people start taking trips, what do they start doing? Uber. I've taken a couple trips to a few places over the past, I'd say 6 months or so, right? I went out to San Francisco for a few days back in the springtime. Guess what? Uber everywhere. Took a million different Uber rides all over San Francisco, right? I went out to the south, last month, or actually that was this month technically. It was not into November yet. And what did I take? A lot of different Uber rides everywhere, right? And so naturally, Uber is going to benefit from folks traveling, business travel, getting fully back and all those things. It's obviously a benefit for Uber. So this is good for their business model. Also, all these events going on again, whether it's, sporting events, whether it's concerts, things like that. Uber benefits from all that. Plus, inflation, on one side it hurts them, right? Because wages. But on the other side, here's the thing. I noticed when I had to take a bunch of different Ubers, right, I've noticed it's gotten a lot more expensive than it used to be to take an Uber somewhere. But the thing you got to understand is everybody's so used to inflation now at this point that people are just like, yeah, everything's going up. And so Uber has, I think, some pricing power there. And they aren't, in terms of Lyft and Uber, they're not really battling for that market share. They understand they got their certain market shares nowadays. And now they're both companies, the pressure's on for them to start building profits. And so naturally, Lyft and Uber both are very incentivized from their executive teams, their board of directors, and their investors to focus on profits first. And so at the end of the day, that's just going to be something that benefits, obviously, Uber in a pretty substantial way. The one bad thing is it's been tough for Uber to get drivers. It's a tougher environment for them right now, right? Now, if you're talking about unemployment going up in any major way in 2023, obviously that will loosen up things because a lot of times what people, look at if they're kind of in the in-between of trying to figure out, do I get, another job or something, they consider something like Uber. And I remember I had considered it back when I was starting up my real estate marketing company, right? It was really slow. And I just started on YouTube and I was like, oh, maybe I'll just drive Uber, 1 day a week or 2 days a week and, make a little money here and there. I'd considered it. And so naturally, when people are trying to figure out what their next thing is, if you get laid off from a job, sometimes people will go to Uber and they're like, I'll drive, Uber. And so that obviously makes Uber's situation better in terms of, let's call it more of a driver shortage in regards to that. Okay. AMD's reporting Tuesday after the bell. So this one's massive. Now, my hope is this baby goes down. And this is one of the stocks I'm looking at as a potential buy in 2023 as well. There's certain stocks out there that I really would like to build positions in 2023 if they remain to, be in the ranges they're at now or even go down. I have my focus on certain stocks out there that I think you guys know as far as the rest of this year goes. But AMD's one I'm looking at strong for 2023. It's likely going to be a down and out year for them in 2023, a year of weakness. And so my hope is this baby doesn't get any sort of ramp up cycle anytime soon. And they just kind of report disappointing numbers and more shareholders sell out in this one. It's obviously stock has been hit very, very heavily, almost 60% year to date. It's been pretty darn devastating for AMD, but that's many of these different types of growth stocks out there, right? Now, here's a bad thing for AMD, or at least if you're thinking about it from a positive side, okay? Analysts have this company growing 8% on average for 2023, and they have EPS going up. Now, in this conference call, Lisa Su and the executive team might throw some cold water on that idea. And because I'm not so sure they're going to grow revenues in 2023 or they're going to grow earnings per share in 2023. So it is possible Lisa Su, she's done an amazing job running AMD over the years. It's possibility she gets in there and just says, hey, a lot of you guys are might be off on your numbers. And, she doesn't have to necessarily say it like that or the executive team in general, but kind of lean in with like, you guys need to bring down your expectations because you guys are all expecting us to grow revenues and EPS next year. It's a possibility that AMD doesn't grow in 2023, right? And so if she throws some cold water in that, it will hurt the stock short term, but I think it would be a benefit for the stock long term because the thing is, if analysts or numbers are too high and they don't address that, right, then you get into a situation that in 2023, people are looking at that and, they have certain expectations and those expectations are hit. You're prolonging the pain, essentially, which is never a good situation as an executive team. You usually want to get out in front of that stuff, especially when you're a great management team, which obviously AMD has, and with Lisa Su and whatnot. So that's definitely a situation there. It would cause short-term pain, but at the end of the day, it would be for a better long-term gain. So we'll see what happens there. But do keep in mind, AMD is a stock that's down massively. So if they just come in with decent, the stock will move up in a pretty substantial way after earnings. But they got to come in with decent. If they come in with dumpster fire, like Google came in with, like Meta came in with, like many different stocks came in with, your stock goes down. But look at Shopify. Shopify didn't report the greatest quarter in the world. They reported decent. That's all you have to do. And look what happened to Shopify. The day after earnings, it went up 17%. 17%. So if AMD comes in with decent, stock's flying. If AMD comes in with dumpster fire, okay, it's going to continue to go down, and it'll be treated just like Meta got treated, just like Amazon got treated, just like Google McDougal got treated, okay? Airbnb reports Tuesday after the bell. So Airbnb is obviously, this is a confusing situation with Airbnb, because here's the thing. This is a company that you think about what company should have benefited the most in 2022. Probably a company like Airbnb. Travel returns. It was a revenge travel summer. So much excitement about travel. People going all over the place. And what happened to the stock? It's down 33% this year. But here's the thing. The Nasdaq's down about that much too, roughly. 30% something, right? And so it's kind of natural that a stock like Airbnb would move with the market. But I got to say, I kind of like this one. It's not, at the end of the day, is it going to be a stock I'm going to buy? No. There's way too many other opportunities out there. But I got to say, their business model is brilliant. I don't want to say they have a monopoly on the market, but I mean, what does everybody say? We're going to get an Airbnb, right? And that's very beneficial. I think their business model is better than Uber's. It's a very similar business model to Uber, but the difference is Uber has to pay a driver each time, right? Airbnb doesn't have to deal with that situation. So I actually like Airbnb's business model is actually better than Uber, believe it or not. But once again, it's probably not going to be a stock I'll end up buying. Etsy's reporting after the bell on Wednesday. And this is my third favorite e-commerce related play. My first one right now is Shopify. My second one's Amazon for e-commerce, right? And obviously Amazon's way more in e-commerce, right? But Etsy is probably my number three. I don't have any money invested in the stock. If it flies down in any significant way, I wouldn't mind building out a position. It's down 53%. It's another one of those stocks that if they come in with a decent quarter, their stock will move up, 10, 20%. They come in with a dumpster fire, that baby's moving down another 20 to 30% after earnings, essentially. But this is what I'm keeping an eye on. I'm interested in it. Here's the thing with Etsy, and this is a problem. This is a company that most people expect to be a high growth company. But as far as analysts, 25 analysts, 26 analysts, they have this company growing single digits and maybe 10% in 2023. So that turns off a lot of folks because they look at an Etsy and they think there should be a 15, 20, 25% type growth company. And so if you're talking about 6%, maybe 10% growth, a lot of growth investors look at that and they're like, I don't know if I really want that. Here's the other problem, and this might be even bigger. So if you're having trouble attracting growth investors, then you got to attract value investors. But value investors looking at this and are like, 218 EPS on a $97 stock? It's a pretty high PE. Do I want to pay that sort of PE ratio for a stock like this? And so value investors have a lot of trouble justifying buying a stock like Etsy. So Etsy's in no man's land right now where it's like, what is this stock? Is it a value stock? Not really. Is it a growth stock? Not really. So it's in no man's land right now, and that's one of just many reasons why the stock's gotten hit. And it could be a problem for the stock over the next 6 to 12 months because people are just like who are you attracting to buy this stock, right? They might attract me in 2023 at some point in time. I do like their business model. I like that they compete in a space that you can't just really commoditize it off. I like that in a significant way, right? If you're talking about Amazon, Walmart, companies like that, it's all about who provides this mass product the cheapest. Etsy, it's so much customized stuff that I think that's kind of makes Etsy special. And they have a good part of the market, right? Now, Peloton's reporting Thursday before the bell is an $8 stock. And I know some people are still actually interested in this one. The way I look at Peloton, it's strictly a trading stock at this point in time. There's nothing there for a long-term perspective. And I've been obviously negative about this since the stock was like, I don't know, whatever ridiculous price it used to be, $100-something stock, right? And I even was short it for a while and made some good money, but I should have kept my short on. The stupidest thing I ever did was cash out of that short. I never hardly ever short stocks. And so I shorted that stock. I made a profit. And then I was like, oh, let me cover. I should have kept that short on. I would have made, oh my gosh, so much money had been ridiculous. But unfortunately, I took quick money there and then cashed out. But in regards to Peloton, the problem with Peloton, it reminds me so much of GoPro. The GoPro is a company I used to own back in the day, and I got out of that stock in 2018. Thank goodness. And if I recall, I think I put some of that GoPro money in Tesla. So, yeah. But the GoPro, people looked at that one, right? And by the way, the stocks are still around the same price or maybe even cheaper than when I sold out back in 2018. So the company's gone nowhere, right? But sometimes people get caught up into, well, it's a famous company, and so, it has to be a good stock or something. That doesn't mean like that at all. And so Peloton, I think, is just going to be one of those stocks that's going to move around. It's going to be a trading related stock, but there's no long-term investment thesis. It reminds me so much of GoPro, so much of Fitbit, which Fitbit ended up getting bought out for pennies on the dollar by Google over time. And it just kind of fits that category of it's a very niche product. People thought it was going to be, the next big thing, which GoPro definitely had going for it at one point. Fitbit had going for it, and Peloton had going for it. Like, everybody's going to ride these bikes around. They're going to make so much money. And then what happened was a bunch of people bought them during Rona, and then they just started collecting dust. And then now you can find them for, cheap prices on Facebook Marketplace and all over the place, right? So, yeah, it's a no touch, it doesn't matter. It could be $5, $8, $12. It doesn't matter. It's just, it reminds me so much of GoPro. It's not even funny. Now, Thursday after the bell, 3 important companies are reporting, and these are, all like sister brother type companies. You got PayPal, Coinbase, and Square all reporting Thursday after the bell. So if you want to talk about Fintech, boy, we got Fintech coming after Thursday. And what's going to be fun is to see which one of those stocks goes up and which one of those stocks go down. Now, in regards to each of those, PayPal is obviously, in my opinion, the safest of those 3 stocks, right? Now, Coinbase, it has problems. Coinbase, we know crypto's a disaster right now, and there's no FOMO, there's no excitement in the crypto market. Plus, there's massive competition in that space, specifically from FTX. So Coinbase remains in a tougher spot, at least this year, right? I mean, you can talk about maybe back half of 2023 or maybe 2024, crypto starts to come back to life a little bit. But for right now, crypto's just in a very bad spot. And the bottom line is with crypto, if there's no excitement, you can't get any movements in major trading there. And then Square is going to be reporting as well, which is just kind of, Square I like. Square has their traditional business model, right, which is a Square readers and like checkout and all that stuff. Then they also own Cash App, which is usually the number 1 most popular financial related app in the United States of America. The other 2 are PayPal and Venmo. Those are usually number 2 and number 3. But Cash App's usually number 1 most popular. So that's going to be something that's going to be huge for Square long term when you own the number 1 most popular finance related app in the United States of America. So, I mean, all 3 I kind of like. PayPal is obviously an investment for me, but you got to look at this from a long-term perspective, because just remember, even though these stocks have been hit, they're just in a tough spot. Now, if they come in with decent numbers, the stocks will fly. If they come in with dumpster fires, there'll be more pain ahead for those babies, okay? FuboTV reports on Friday before the bell. So this one matters for me. I bought a lot of Fubo stock over the past 3-4 months or whatever. And this is a stock that's doing very well over the past 3 months. It's up about 50%. And in regards to Fubo, my expectations for this one are pretty high personally. Here's the thing. The trends are still going very well. So in terms of the quarter they're about to report, I think those numbers should be great. In terms of next quarter's guidance, I think it should be very, very strong. If I look at Google Trends, recently we're trending at about 67 for relevancy versus the same point last year was at a 56, which was the second most relevant year ever, behind only this year. So Fubo's building strong. I think revenue growth is going to be absolutely amazing for Fubo. And if you're thinking short term for this company, one is we're in football season right now, so there's still mass amounts of people that have been signing up for Fubo because it's football season. And during football season, people sign up for different services, and Fubo is the number 1 service if you're thinking about a streaming product that you're going to sign up for to get the most games. As a college football fan myself, there's nowhere you're going to get that many games. And also their technology where you can watch 4 games at the same time on one screen, all on one device on your Apple TV, is unbelievable technology, and no one else is providing that out in the market. If you want to watch 4 games on one massive 85-inch big screen or something at your house, right, You used to need like 4 different cable boxes for that to pull off something like that, something ridiculous. And now Fubo just has it, and you can get that for like, $70-$80 a month, which is amazing in terms of that technology and being able to watch multiple games. And so NFL fans, college football fans, I think that's starting to spread. And I think Fubo's at an interesting point in time where they're getting close to escape velocity, which is a very exciting thing for a company where you don't even have to start spending that much on marketing. It's just word of mouth starts spreading because you reach such scale. And this is something Tesla definitely benefited from is, people experience a product, and because it's so cool and the technology is so cool, people spread that like wildfires on from friends and family. And that's something I've noticed with Fubo is just, it's such a cool product. And you want to tell friends and family about this. Like, look at what I can do. I can watch so many different games. I can put this game here and you watch 3 games at once, 2 games at once, 4 games at once. It's amazing technology. So I look at that as being in a sweet spot there. Now, in regards to Fubo, obviously it's a money-losing company, and that's, the thing that's hurting them right now in terms of, the way people are looking at it from an investment standpoint, right? But you have football season going right now. Then we're about to go into World Cup. So in terms of demand for Fubo, it's going to remain incredibly high going into from football season to then World Cup season, because there's a lot of people that don't watch NFL but love soccer. And so this is going to be a massive benefit for Fubo, and I wouldn't be surprised if the Google trend stays very high for Fubo over time, right? Now, I'm hoping at some point in time Fubo can get a deal done with TNT at some point this year, because, obviously once the World Cup ends and then football season ends in January, man, and then the attention kind of turns to basketball. But TNT is very important for basketball fans. And so my hope is Fubo can get a deal done with TNT sometime soon and be ready for springtime for basketball, especially once, football kind of ends there and wraps up. Now, Fubo's done a great job retaining folks, but I think this would just be another thing, because if you're a basketball fan, you're considering Fubo, it's kind of tough when you don't have TNT. But Fubo's also looking at it from a profitability standpoint, and they got to make sure profits are hit. For them, basketball is not nearly as important as football. Football is everything for Fubo. This would be a nice kind of cherry on top, but Fubo's got to get a fair pricing there. And so my hope is that can happen and things can kind of work out there. And, if that stock, I wouldn't be surprised if that stock's $4 or $5. I hope it's still $3 at the end of this week, but I'm probably thinking it's going to be $4 or $5 or maybe even $6 by the end of this week. My hope is it's $3 though, because then I can just have more time to buy more shares for obviously a cheaper price. I think it's important everybody keeps an eye on Meta this week. I think it really is, regardless if you want to own the stock or not. It's a stock that absolutely got wrecked last week. It's been wrecked the whole year, right? Down 70.7%. And in terms of everybody that reported last week, there's no stock that's been more talked about and debated than Meta. And we've gotten this weekend now, right? And I'm going to be very interested to see how this stock price moves this week, because we've had a weekend now that I think Wall Street can kind of sit back and say, did we just make a big mistake? We sold the stock off in mass when it's already been leveled, right? We just sold off the internet. Facebook, Instagram, and WhatsApp is the internet. And so they just sold that off, right? Plus they sold off Google search and YouTube as well this week. And so I think they're going to kind of look, had a weekend here to adjust and be like, did we make a big mistake? Reminds me of like, somebody cheating on their significant other and whatnot, right? And they're like, did we just screw up really bad here? Like, what did we do here? And I think that's the way, Wall Street's going to look at this. And I think they've had the weekend to kind of contemplate this and be like, I think we just probably made a little mistake. We probably got a little too excited here, and we sold the stock off so heavily that we might need to start buying it back as this week goes along. So I'm going to be watching that one. It's going to be very fun to kind of just see where that stock price moves. And if there's any sellers left in that one past Monday, you kind of got the 3-day rule in regards to stock, right? Which the 3-day rule, if you never heard of that on Wall Street, it's basically, when a stock goes down big on earnings, you don't touch it for 3 days after the earnings. And so they reported Wednesday after the bell. So you got Thursday trading day, you got Friday trading day, and then you got Monday trading day, okay? Which means Tuesday is fair game for Wall Street to start loading back up on it if they want to. And if they are like, yeah, we screwed up here, we need to get back in this stock. We sold this baby off way too heavy. So Tuesday through Friday, watch Meta stock, add it to your watch list, regardless if you care about the stock, and just see what happens there. I think they're going to realize they made a big mistake in Tuesday through Friday. I wouldn't be surprised if that stock moves in a pretty significant way on the upside, just because they realize, oh crap, man, we dumped this stock way too heavy, and we need to get back in it. So we'll see what transpires there. Hope you guys enjoyed this video. As always, I'll keep you up to date with everything going on in the market this week. Thank you for everybody that subscribed to the channel. I appreciate each and every one of you. As always, if you're looking to join my private stock group, get access to private Discord chats, the course curriculums, know what moves I'm making in the market, everything else as far as access to that, check out the pinned comment down there. Apply to join us in there. And once you join, say hello to me. Send me a DM in there. And much love as always, guys. Appreciate you. Have a great day.